Hi. 2018 started on a strong note for LHV Persian Gulf Fund and the Middle Eastern markets. In January, we had a performance of plus 4.0%, which was followed by a very volatile and nervous period in February in the global markets, to which actually the Middle Eastern markets felt relatively immune and moved in a calmly fashion most of the month. Nevertheless, we had a negative performance in February, minus 2.4%, bringing our year-to-date result to plus 1.5%. In January and February, majority of our fund holding companies reported their Q4 results. Out of the top 10 biggest single investments which we have in the fund, we could say that one of the companies reported a weaker set of results. One of the companies' results were by and large satisfactory, and in 8 cases the results were good or very good. So all in all, we were actually quite pleased with the Q4 earnings season. We could especially highlight some of the industrial names which we have in the portfolio, Ras Al Khaimah Ceramics, Aluminium Bahrain, and Sipchem, and also Dubai banks, which reported very nice results in Q4. Now next week, in the beginning of March, I'm attending a large Middle Eastern conference in Dubai, where I get to meet most of the companies which we have in the fund. And then I get to hear first-hand comments from those companies, how they have approached 2018 so far and what they're looking for from the remainder of the year. Now, when we're looking at the valuation of the fund, then we can see that our single investments trade at 9.1 times forward-looking earnings and 1.0 times trailing book value, offering 3.7% trailing dividend yield. These valuation levels are cheap, I would say, and they have become more attractive during the last couple of months as well. And now, I mean, we're approaching March and April, which is the dividend payout season in the Middle East. And I just wanted to remind you that historically, this has been a good period for the Middle Eastern stock markets. Thank you.